What is up, everybody? This is Bronx Viking here. Um, this is my quick analysis of what happened to GameStop this week and where we can possibly see it go from here. Certainly no promises, certainly no financial advice, yada, yada, yada. And being GameStop, being a meme, being super volatile, um, it's really tough to forecast, obviously, because you don't know what catalyst is around the corner, i.e. Roaring Kitty, what kind of post he's going to make, when, if he's going to show his updated position, if Ryan Cohen's going to tweet something, the works. I've been following GameStop since 2021, played it big in January, February 2021, back again in the early summer, late spring for the second round. Been all over Reddit, Superstock, all those forums, the whole nine. So I'm extremely familiar with this situation. DFV's first round of tweets back then. Everything you could think about, every single conspiracy theory on it. A Tobit back in Reddit days, all the DD. I've been through it all, believe me. So, but this is just purely my technical analysis take on it, and to see if the chart's giving us any kind of hints about what we can see going forward. So, that being said, let's do exactly that. Let's jump right here into the chart, which you have in front of us. So, this is the daily pattern for GameStop. Mentioned it last week before the breakout, or I guess that's close to 2 weeks ago now. Was you saw this really nice volume breakout from the start of May, up from the $10 level all the way up to like the 17, and from 17 you saw it start to consolidate right here, right around this powder blue line, and that's the 200-day moving average. So it was bouncing all around that. It kept, see this little flat top here, it was forming a bit of an ascending triangle kind of look, something like this, right? When you have a flat top and then you have a rising bottom of higher highs, higher lows, pardon me. And as that was happening, you saw the volume come in, you saw the volume flatten out, which is what you want to see during times of consolidation, typically before a big move. Right over here on this Friday the 10th, I believe that's when Roaring Kitty liked the Run Lolo Run tweet, and that's what everyone got really fired up about the first time, before he ultimately tweeted, leaning forward in the gaming chair, just like the red version, as opposed to Zach Morris's blue version for AMC, right? I mean, he's paying attention, and that obviously started the frenzy and the crazy gap up into Monday morning. So it did have a really nice technical move, a technical breakout, and then you got the catalyst. And while this was all going on back here, you started to see a ton of calls come in. So that just applying a ton of pressure, adding a ton of gunpowder into the pile, just waiting for that spark to ignite it. And obviously that was Roaring Kitty doing the work. Now, we do not know yet if it was him loading all those calls. Hopefully it was. I mean, hopefully he made a ton. It'd be a really missed opportunity on his part if he wasn't loading calls back then, only to throw the match on the said pile of gunpowder, sending us running, all the way up from 17 up to here. And market open was 270, 280%. But if you had shares during pre-market, we got as high as, I think it was close to 80. Yeah, it was like 80 on the dot right there, right? So this is the extended hours look, which is why you'll see me a couple times flip back and forth, is because extended hours and regular hours, you really want to flip back and forth always between the two, just to get the full picture, the full idea of where things are rejecting in pre-market, where they're basing off of, what the candle spreads look like. I mean, you just paints a so much better picture than if you were here in regular hours. And you're right, you just got these big gaps in the chart, which is what people talk about all the time, and we'll cover gaps a little bit in this video. But it really gives you a clear idea of what kind of happens. So let's go back to the daily. So Roaring Kitty tweets leaning forward to the gaming chair, big gap up Monday, and then he just starts his crazy barrage of tweets. Tuesday, I mean, we're gapping up even more, complete frenzy, and then we start seeing the halts, right? We saw some halts on Monday, and we saw even more on Tuesday. I think Tuesday it gapped, it halted like 37 seconds into the trading day, which is obviously just, I mean, don't gotta tell you guys, but it's just complete bullshit. It's absolutely insane. Total market manipulation in broad daylight. Can't stress that enough how I feel about it, but Fact of the matter is that that's the game that's being played, so you have to play it right back, and you have to certainly take that into consideration when you're opening a position, holding a position, whatever it is. You just got to know going in that it's a massive wild card. Is you don't know what's going to happen during after hours, during pre-market. If you're holding options, if you're holding shares, one thing, right? Because you can sell your shares before, but you cannot, like I said, close out any options contracts, buy any option contracts. So it's really a total lotto. What can happen, and we saw that happen to the downside on, was it Friday morning? Was the big drop? Yep, when you had GameStop pre-announce their earnings, and they had miss on, I think it was a double miss, top and bottom line. It was definitely a miss in the bottom line, and then you had the share offering for, was it 45 million shares? So just some negative catalysts that obviously that no one was expecting because their earnings were coming up in June, right around the corner. So it's a little odd. I mean, I can't speak to Ryan Cohen or the rest of the board's plans or officers' plans about why they would do that, but they did, and those are certainly things that you have to be prepared for when playing GameStop or any other kind of stock or chart that's running absolutely wild. And these officers, CEOs, they have a fiduciary duty to the company to do what's best. And if Ryan Cohen thinks it's in the best interest of GameStop to strengthen their balance sheet by doing a share offering and raising another $500 million to $1 billion in capital at these elevated prices, well then that's his prerogative. That's his fiduciary duty. But that being said, let's get back to the chart because I can't speculate on what's going through his mind at the time. Other than that, don't know. We'll see if he has something up his sleeve. But for now, we'll just play the charts because that's all that we can control. So we'll start our way outside again, and we'll go a little bit in. So really weak, disgusting, ugly candle. This massive shooting star. Shooting star is an upside down hammer candle that comes in an uptrend and gets driven right back down, as opposed to a hammer candle. If this is flipped, it'd be pushing up. So it just shows you that we just got driven down from the highs and closed down here. But that being said, on the weekly, we still got our highest weekly close since back in last July of 2023. And we definitely held above the breakout level of 1750. So from a weekly chart, do I love this candle? Technically speaking, no. Certainly not. By no stretch of the imagination do I think this is a bullish candle. It's not. Don't let anybody tell you otherwise. There's just certain aspects of it, of the chart, that you can debate are relatively bullish in the grand scheme of things, and that is still closing up above the 1750 level, the 200-day moving average, the 50-day moving average, and you see over here we got a weekly 921 cross. That's this little cross pattern here on the 921 EMAs on the weekly time frame. Doesn't mean we can't cross right back down, but we did get our first weekly cross back up, which again, so perfect example, you had it back here, big move up, driven down, and it did cross right back down. So given my full unbiased take here on what I'm seeing. But let's get into the daily, because the daily does give a little more glimmer of hope. So we saw this gap right up here get defended. There's still an imbalance in the price, right? Meaning there's no candles being closed here from this breakout till now. You saw it got hammered right back up above this level. So that's good. And this gap over here that I'm speaking of did get defended. So anybody that was chasing the 1750 level puts in the short term, maybe for Friday 0 DTE, did in the meantime kind of get bagged, right? It faked out. People are screaming, oh, all gaps get filled, which don't believe that. I can show you gaps on SPY from 1972 when it was trading at $50 a share that are not filled, okay? All gaps do not have to get filled. Is there a likelihood that it heads for a gap and does a little fake out? Yes, you'll certainly see action come back towards a level to sweep liquidity out. But you're not going to get a perfect bounce every single time. And because it would be a layup, right? If every single gap got filled, okay, 1750 has to get filled. I'm just going to hold 1750 puts for 2 months out, 3 months out, a year out, whatever. And then when it gets filled, I'll close them out and go on. Like, no, it does not have to happen like that. So what did we do? We faked the gap fill to these hot to down here where the gap was defended, which in itself is bullish. We hammered right back above the 21 EMA right here. So this red one's the 9. This is the 21 moving average on the daily time frame. So that's good because technically speaking, you want to see those defended because that's what happened back here, right? You had a big breakout and you saw the 9 act as support, and then the price followed up the 9. That's called riding the 9. All right, that's good. As opposed to other times in the chart where you see it lose the 9 or the 21. So go back here. It gets stuck below it, and then what happens? It starts rejecting off it, and then comes down to newer lows, rejects again, and it's trapped, right? But when you do get the upside break, that's good. You can ride it on up as long as you hold it and volume keeps coming in to support that big move up. Happened back here, right? Broke above it, bounced above it, caught the 50-day, big move, caught the 9, and then started a little uptrend again back here in December of 2023. So that's what you want to see. You want to see those moving averages hold. You want to see levels of support hold. You want to see gaps defended. And we did see that on Friday. Okay. Granted, it was May OPEX, May options expiration. So you did have a ton of options expiring, moving around, reshuffling. And we saw that in the very back half of the day. Let me go over here, over to net premium. So this is the flow going on throughout the day. This is the put side or bearish flow, net put premium. This would be the bullish side, net call premium. And you saw puts were being held all day long, right? People weren't letting go, bears weren't letting go, shorts weren't letting go because they were thinking maybe there's some more downside in the day. And then as you got to the very end of the day, 345 right here, they realized they're not getting their big drop. It's not going any further. It's time to close out those puts and collect whatever premium they were worth. And you saw them sell off aggressively. And during that time, even now before or so, a half hour, you saw calls start to tick in. And why did you see that? Is because for the reasons I'm saying, you saw it get defended. We can go on the hourly time frame, right? Bears were not winning. Bulls were not giving up this level. They were defending that level strongly. So when you see that starting to act as a level of support, calls started creeping in. People started sizing a little bit more, taking a shot at it. And then those are the gamblers. Those are the people that want to get a good average if there is an upside move. So that's good. That's some good bullish sentiment returning. And you see it right here, right? All day, calls were flatlined. And then, like I said, around 2:30, 2:35 to be exact, it's ticking up, ticking up, ticking up. So little by little, they're adding some more, adding some more, adding some more to the call side. And you see here the blue line, right? This is the low of the day, this is a low of the day back here, but it starts creeping up, creeping up, creeping up. And so now you have the put selling off at the end of the day, and for another good reason, right? Is if Roaring Kitty did tweet a position on Friday, he didn't, but if he did, or if he tweeted out some really great catalyst, Ryan Cohen, all the things I said in the beginning of the video, it's not worth it for them to be holding puts for further out, because this is the total accumulation of puts, not just for Friday, but for that was flowing in that day and going forward for next week, for this upcoming week, for June, July, whatever, leaps. So it's not worth it for them to hold. So they're closing out those puts. They don't want to get squeezed over the weekend with a big gap up Monday. So they start selling off. Coal buyers are stepping in, buying their lottery tickets in hopes that Roaring Kitty says something great. So that's what you see. So you see a little divergence there between bulls and bears. So that's pretty good. So going back again, if you draw a flat line here to the bodies of these candles, you see that 2045 level getting those candle closes. Creep up even a little more, 2050, right? Every time it looks like it's breaking 2050, bought up, bought up, bought up, bought up. So that is being defended by buyers. Could it be, again, is it Roaring Kitty buying that? Is it a hedge fund that's bullish on it? Is it retail? Whatever. Someone is buying up GameStop anywhere below this $20 level and just sucking it up, sucking it up, sucking it right up. So that's great. So 2050 looks to be acting as support. You saw a break above VWAP, this blue line right here, a bounce above it, and then a little push to close. As like I said, you had those puts getting sold off, calls coming in, some positive gamma pressure, positive delta pressure to the upside, depending on how in the money, out the money the calls may be. But that's what you're seeing right there. So that's good too. So going back to the daily one more time, we also posted what could be considered, it's very close to a hammer candle. This is the body of the candle right here, the color. That's the wick going through it. It's close to a bullish candle, hammer candle, but this is more of a hammer, a little bit bigger of a body here. This is more of a hammer right here. This is more considered just like a doji. This would be a spinning top candle. This is the doji, and this is most certainly, in my opinion, a bullish abandoned baby candle. It's on plus volume, so these are your volume bars here. And so you had kind of some seller exhaustion over here, in my opinion, right? And then you had bulls kind of coming in, and as I showed you on the hourly chart, defending that 2050 level, and that's good. Like I said, bulls backed off. There was tons and tons and tons of calls being sold off here these last couple days. If you go to like the hot chains on usual whales and you check like the volume for the day, you'll see it was just negative, negative, negative change in open interest on calls. That's just the truth. Calls are being sold off aggressively. They're becoming unhedged in that situation by market makers, and that's leading to just positive downside pressure on the stock. But getting back to the bullish abandoned baby, the example right here, right? That's it. So you have three criteria for a bullish abandoned baby. You have a big sell candle, you have a gap down with a doji candle at the bottom, and then you need the follow through confirmation. So Monday, we need a gap up, and we need a strong full body candle with a wide spread, right? The height of this candle over here, to confirm that there is a reversal on the chart. So I want to see ideally tomorrow, a gap up above 27, above the daily 9 would be just incredible. But either way, that's what we kind of need to see. We want to see a gap back above this kind of 25, 26 ideally, and then not give way and just push on up through with some more volume following through on the chart, ideally back into the 30s. That's what we want to reclaim. We want to start reclaiming some of these EMAs like I showed you in an earlier example on the chart. You lose it, and then you want to recover it, bounce off it, and keep pushing on up. So that's what I'm really watching for in the short term. Gap up back above the 9. If we push tomorrow, if we don't gap up tomorrow, and the stock bumps against 26 and rejects hard, well, then that's just a dead cat bounce. EMA retest could be like a little bull flag forming on the hourly, where you just low volume, kind of just a flaggy move up, right? So say we just kind of just start building out a flag, or like a rising wedge kind of look on low volume, float back up into this 27 level, and then volume comes in and just rejects hard. That's kind of the worst case scenario. Besides just another gap down. If we get another gap down, that's definitely a worser case, but we don't want to see a light volume, just rejection of previous support that's now acting as resistance. We don't want that. We want a nice strong gap up. Again, ideally above this 27 level, and push off that, reclaim it, and then start making a move back into the mid 30s, and then eventually the 40s. That's what we're looking for. And something pretty interesting, you'll notice I have this orange box over here, right? Something I noticed on the chart. So we had this tilted head and shoulders look over here. I'll show you. So left shoulder, head is anywhere in this range over here. Another one down here, right shoulder. I had this drawn out. I shared this on Twitter with you guys on Thursday, trying to give you guys as much help as I possibly can right now. Typically, I just keep this stuff within the Colin Gladman's Discord, where I'm predominantly, majority of my time with my members there. But it's exciting times for the market, and I know how personal this stock is to many, many people for, over 3 years now. So I generally do want to help out as many people as I can. And try to juggle my responsibilities between the Discord and just helping you guys out in the public. So I shared this to you guys, and we just couldn't reclaim this level. I said I wanted to see 40 kind of reclaimed. We did not. We couldn't hold it. Push right back up here, came down, got trapped below the neckline of the shoulders, and then we kind of just, this is a bit of an H pattern, it's called. H patterns when you kind of just straight line and then form a little lowercase h, right? And then you just flush right down. Make it a little cleaner. See, little lowercase h, and then you just lose it and right down to new lows. So that's what happened there. No bueno. Like I said, all while this was happening is when calls were aggressively getting sold off. This was the final candle close of the day. And then you had overnight here Friday morning, GameStop earnings, as I just mentioned, came in bad, share offering bad, and just lost that level 2760 that I keep mentioning. So no good. But getting back to what I was first mentioning, I want to shoot over to the 4-hour chart. All right, so just staring at this chart here. Okay, now let's go back to the 2021 squeeze. And let me just clear all this excess out for you guys. All right, because I want this to be as clean a look as possible. So it does look similar to me. Now this is on a daily time frame, and this is on a 4-hour time frame. But what do? We had a creep up, consolidative move, huge blow off top. Blow off top meaning ton of volume coming in, ton of volume going out, where you just kind of retrace the move as quickly as it happened. Just bang, bang, done. 2021, same thing, right? You had creep up, consolidative move. So picture if this is our 1750 level back here, as I mentioned in the start of the video, right? Before the big pop, you had this consolidative move back at the 1050 level in January 2021. Then we had the big pop, the big move up, and came right back down. And then what happened on the daily? So again, daily time frame. We saw the stock kind of just trading sideways in this zone from all the way back, again, one more time, to 1050, $10 level. The highs around 13, 14, and just trade sideways for an entire month, right? And if you're one of the OGs, you remember what happened back here to spark this off again. This was the infamous Ryan Cohen frog and ice cream cone emoji tweet that just started the next run right back up. So, okay, one more time. Consolidative move, big blow off top, consolidated sideways trading right around this 50-day moving average over here. After, it's not a clean head and shoulders like what I just showed you before, but rejection, same level, trending support, bottom dropped out, little, like I said, a little H pattern over here too, right? Over here, pop, lows, so a little similar. All right, sideways trading along the moving average, and then catalyst comes in, and boom, we are back off to the races towards the highs again. Now we got to March, and I think, was this the, this might be the original, the quad witching day. God, who was it on Super Stonk or the GameStop Reddit forum that had a theory about what had to happen back here in March? You guys, OGs, know what I'm talking about when that happened. Was it Pixel? I think it was Pixel. Had a theory about what was going to happen over here in mid-March. And certainly no shade to him. There's a lot of stuff going around back then, but just so you know, I was around back then for every single theory that was floating around. And nothing came of it, obviously, but until we got back to the next round in the spring and things kind of ran again. So either way, getting a little off track there, but just want to get back here, right? So consolidative move, blow off top, consolidative move around a major moving average, catalyst, go. Consolidative move, big blow off top. Now, what I want to see is some sideways trading action over here. Okay, I want to see this 50-day moving average on the 4-hour time frame keep on creeping right back up. I want to, at the very least, see this $17.50, $18 level I mentioned get defended, just like this level back here from the first consolidated move around 10, 9, as I'm showing you guys, get defended, and then we need a catalyst. So the big difference between these two charts is just this is a 4-hour time frame, and this is a daily. So I'm stressing that again. So this should play out quicker, right? 6 times as fast if it is following the same kind of algorithm. If you believe in fractals, if you believe in algorithms, this is right in your wheelhouse. It does not have to happen. It is not guaranteed. Just certain similarities I am pointing out that occurred last time. So what I want to see, look at the bottom of my screen, the date on this right here, the date and the time. So you see Monday, Tuesday, Wednesday. All right, I want to see this week more consolidative price action. If we don't get a bullish man and baby, if we get a bullish man and baby, follow through and get right back over to 27, great. Ignore this. We are right back off to the races even faster. But at the very least, if we do not get a gap up tomorrow, Monday morning, and some great follow through off the back of a catalyst, you need a catalyst. I want to see this level defended, and then eventually I want a catalyst to come in here by the end of the week. If it takes even longer, no problem. Anytime you build out support above previous resistance, that is great, technically speaking. That's what a person like myself or any other technical trader is watching for. And what I would be doing in this zone down here, if this keeps getting defended, is this is where I will personally be adding some calls. Light size, lotto size, nothing crazy, right? Because nothing is guaranteed. You can get another catalyst to the downside. Another congressional hearing. Who the hell knows, right? You don't know with GameStop. We've seen it already with GameStop and memes. But if this level gets defended, implied volatility is going way down on your options contracts, meaning they're getting cheaper in value. Back over here, IV, when the options chain went only over to 34 around here before it was expanded up to like 54 back here on Tuesday, implied volatility was absolutely juiced, meaning those contracts were super, super expensive because a major move was getting priced in because we saw a major move, we saw a follow-up on it. So I think the cheapest contract, like if you were looking at 517s, which just passed, like 34 Cs on Monday, 34 calls, they were going for like $2,000 a piece. And then when we were over here on Tuesday, the 54 calls, which was before the options chain got expanded with deeper strikes out to 100, 128, wherever it is now, World was also like $2,000 a piece because IV was juiced. They priced out retail. And that's another reason why this sold off, is that the average retail trader, some of the little guys, they can't afford to get multiple contracts. It just is what it is. I mean, that's why trading shares isn't a bad thing either when things are really running, because you can grab easy 100% on your shares. So you don't have to play options. But fact of the matter is, you do never want to buy calls into a big move like this, is because you're paying out the nose for the spiked IV on those options contracts, and it's almost impossible to get a good return on those unless you're seeing a further IV spike, a further huge move up. So you're really just relying a lot on just the squeeze keep on rolling through. So when you saw halts going in intraday, buying calls was really, really just not a really good move for anything other than a lotto, because they were holding it during the day, right? It was really impossible, really, really difficult to get any kind of return on those contracts if they were holding it after every $1, $2 move, right? So you were relying entirely on after hours price action, and you saw anybody who did get calls got bagged in the short term, right? This can always reverse, and they can end up paying off in the long term if we get a squeeze up to whatever level. But in the meantime, getting back to my original point, this is good. This is good. I said I thought what maybe Roaring Kitty was doing was just people were getting annoyed with so many of his little memes and his videos coming out and no follow-up action on the chart. Well, I think that could be by design. Again, this is all speculation, because if I'm him, that's what I would do, is just anybody who chased here, it sucks you chase, but you shouldn't have chased with calls. Let it come down here, let it consolidate, let IV come back to a relatively normal level, which it's never going to be low on GameStop, because GameStop always has big moves. Its IV is always going to trade higher than a name like Apple or Google or Amazon or any kind of the Mag 7 names besides NVIDIA and Tesla, which trade a ton of options contracts on a daily basis, ton of volume, have big implied moves always kind of priced in. So GameStop and memes, you'll see this on other kind of names like Upstart, Carvana, whatever. Names that move a lot and big, they tend to have higher IV because they have a broader and a wider range of outcomes at any given time. So that's why you kind of pay a little bit more on the contract for the calls and or puts. But when you have sideways action, the IV does flatten out. The calls become much more affordable, and you'll know that because if you bought calls back here, one, you're seeing the price go down because of they're losing intrinsic value, meaning that they're going out of the money, and the IV is going down. But even if you had, 18 Cs for August, September, October this year, whatever, they're still losing value even though they're in the money, because the intrinsic value, the IV implied volatility is going down. So you want to see the implied volatility come on down, the stock price flatten out, and this range is, if you are going to trade calls, this is when you want to do it. If you get some nice sideways action and if you believe another catalyst is coming, well, then this is your best case scenario to add here. And then once you get a pop, a gap up off of said catalyst, that's when the price of those contracts skyrocket. So That's how I would be playing it if this level is defended, if we don't get a bullish event and baby follow through right away tomorrow. And if we kind of start reclaiming some EMAs and riding to the upside like we saw. So that's really it, guys. So I hope this was helpful. I'll keep on posting on Twitter best I can if there's any developments, if I see anything interesting. Always do my best to kind of help you guys out. If this video was helpful, give it a like on Twitter X, whatever you want to call it now. Give me a follow back. That's really cool. You don't got to subscribe to me on YouTube or like it on YouTube. I don't post too much on there other than for Discord members. So I'm not asking for that in return. Just kind of hope this information helps and that none of you retail traders are getting caught chasing any contracts that are too risky or more than you could handle personally affording to lose. So don't want to see anything happen like 2021 where so many people just got wrecked chasing calls and over leveraging. Really not cool. I want to see you guys do well. I want to see everyone succeed. I want to see great stories, great gains being posted. There's a lot of great people out there. So just do my best to try to help you guys as much as I can. So hope you guys had a great weekend. Sincerely hope we have a great week ahead, a fun week. I love when the market's like this. I love when things are running. It's just fun for everybody to see everyone participating on X again in just a fun manner. So thanks so much, guys. Hope this helped, and I'll catch you guys around. Cheers.